Shadow banks. China is currently facing economic challenges despite the recent stimulus measures announced by the CCP. These measures haven't significantly improved the country's economic prospects. Additionally, there are growing concerns about the stability of China's shadow banking sector, which comprises opaque financial institutions like trusts. This is a matter of great concern for the CCP, as shadow banks play a vital role in lending money throughout the Chinese economy. Any stress or instability in this sector could potentially have far-reaching consequences for the broader economy. In this video, our aim is to provide an in-depth explanation of what shadow banking is, shed light on why China's shadow banking industry stands as the largest in the developing world, and discuss how these dynamics could exacerbate the existing economic crisis. To understand the concept of shadow banking, it's crucial to recognize that governments strive to maintain control over their money supply to ensure it aligns with the production of goods and services. Typically, this control is entrusted to regulated banks supported by the state. A pivotal distinction lies between deposits, where individuals invest their money in a bank, and investments, where funds are provided to non-bank financial institutions. Deposits are perceived as safe, as they can be withdrawn at any time, and they enjoy the backing of the state. Investments, on the other hand, carry more risk, as the financial institution managing them might face bankruptcy. Nonetheless, certain non-bank entities, known as shadow banks, mimic traditional banks by assuring their investors that their investments are secure and easily accessible, even when, in reality, they are not. China has witnessed the proliferation of shadow banks, partly due to the CCP's past ambiguity regarding which types of banks it supports. Attracted by higher interest rates and a belief in the implicit backing of the CCP, many Chinese investors have moved their funds from regulated banks to these unregulated shadow banking entities. In fact, a significant portion of China's total debt is owed to shadow banks, and they have been issuing more debt than traditional banks since 2009. This situation has contributed to China's economic challenges by directing a substantial portion of funds into speculative and risky assets. Despite efforts by the CCP to crack down on the shadow banking industry since 2017, progress has been limited. At present, China's shadow banks are grappling with significant challenges, primarily stemming from being over-leveraged and lacking transparency. One common form of non-bank entity in China is trusts, which collect funds from investors and employ intricate financial instruments to lend to property developers and local governments. Trusts have become a massive industry in China, valued at approximately $2.9 trillion. However, as property developers and local governments face financial difficulties, trusts are also feeling the strain, with instances of defaults becoming more frequent. The true test for trusts will come when they are due to make substantial payouts to investors in December, potentially triggering a panic among investors akin to a shadow bank run. The CCP is particularly concerned because the opacity surrounding the lending practices of these shadow banks, coupled with their diverse investments, renders them susceptible to contagion. This implies that problems within the trust industry could easily spill over into other segments of China's economy. This predicament underscores the formidable challenge of regulating shadow banking. While shadow banks can fuel economic growth, particularly during prosperous times by directing credit to sectors that traditional banks may neglect, they become a pronounced risk during economic downturns. This makes it a complex issue to address effectively, as it's both too significant to ignore yet elusive and intricate to fix.